I'm excited to kick off today's session with two people who really know their stuff when it comes to protecting your business. I'll start with Jen Howard. And I have to say, I've known Jen since 2018 when she was my Centricon rep. So I can personally vouch that she has always been the kind of person who goes above and beyond for the people she works with. It's no surprise she's carried on that same energy the insurance world at PCO Insurance, where she specializes in making sure pest control operators like us don't get caught with gaps in our coverage. Joining her is Brandi Bingham, director at Stone Falls Insurance, who is bringing over 2 decades of carrier side experience to the table. Underwriting, claims, policy creation, she's seen it all. Together, these two are going to give us a real look at how to protect the business we've worked so hard to build. Please welcome Jen and Brandi.
Thank you. Well, Jason, thank you so much for that very kind introduction. My heart is warmed and I really appreciate it. Thank you so much. It's been a pleasure to know you and work with you over the course of the years. And Brandy, again, thank you for your willingness to hop on with me and to and work together and be a partner. I really appreciate it.
Yeah, I'm happy to be here. Thank you guys for inviting us.
You bet. So please, anyone online, hop in with a question at any time. So I don't know if there's a chat box or if Jamie Claire, I'm sure, is monitoring that. But by all means, we like to keep this as informal. There's that chat box, informal as possible. So by all means, like I said, you're welcome to ask questions anytime. So we will get going. So what we're going to talk about today, of course, is drive smart, pay less, reduce auto accidents, control workers' comp claims, and really reward those safe drivers. And so before we kick off, I do want to give let me see here. Gotta go this way. There we go. Give a quick shout out to the Texas Pest Expo, who really has been great friends of ours in the business, and we appreciate everything that they're doing for the industry and for pest control operators statewide. So, of course, the expo is coming up here June 16th through 18th in 2026. It is the fifth annual. I am proud to say I've started attending from the first annual, and it's quickly turned into one of the most fun events of the year. And also just doing a lot of good things as well. So here's yours truly, Jason Wheeler, and other members in the industry as well who are working for the pest vets. So here we were filling bags for pest vets and giving back and volunteering. And that's always been a mission, of course, of TPCA as well. So in addition to bringing in vendors and spotlight on new products and value add to pest control companies, always giving back along the way too. So really appreciate that. Sign up if you haven't already. Invite some of your friends also from the state of Texas, of course, and neighboring states. Real quick, there's Brandy and I. I'll have the slide at the end as well, but in the event that you want to just take a quick picture of that, if you have to hop off early or whatever it might be, there's our contact information, and again, we'll make that available to you. So what we want to talk about today, of course, just a little bit more about Brandy and I. Jason did a great job with that introduction. Thank you. So really our mission is to provide top tier protection to pest management professionals and from an insurance standpoint at affordable premiums. We know that truly small business owners are the heart and soul of America, and we love pest control operators nationally and specifically in the state of Texas. So by no means do we want to, we know that those premiums can be high. And so we want to be really conscious about that and do right by you on making sure that we're looking at that affordability. Real-time guidance by the knowledgeable carriers, like I have Brandi, who brings 20 years of insurance experience. I joined Warren Hull at PCO Insurance in December of 23 after 10 years in the field as pest control specialist. And so it's fun to be on this side of the business. If anybody would like me to invite me out though to maybe run a route or check some Centricon stations or bait stations of any kind or whatever that is, I am kind of itching to get back into the field a little bit. So you're literally welcome to holler at me and I'll hop in a truck. We just bring a strong background and deep expertise in underwriting, pest control, and business development overall. So what we'll focus on today is some auto insurance trends, of course. I'm also going to loop in some information about telematics and GPS kind of for that safer fleet. Put some fun statistics behind that as well on like really what that means for you, that real world application. We're going to dive a little bit into some workers' comp as well as it's tied to auto. And we always love a good story, real world Q&A, and how this applies to your business daily as well. So let's just start with some of the basics here. We'll talk about commercial auto in the sense of coverage, symbols, and just kind of the overall policy. We just know that that's essential for operating your business safely. I will be honest, and Brandy can certainly attest to this as well. I regularly get someone who's reaching out and are not properly covered and literally have a personal auto policy and not a commercial policy. So they're using that in the event of an accident or something to go awry, their personal policy will not cover their fleet in any way when it's used for commercial. So it happens, it's on the regular, and we just want to really kind of clarify on some of that as well. We'll talk a little bit more too about the coverages of liability, the physical damage, med pay, and uninsured and underinsured motorist as well. And then just kind of looking at those, how are those premium costs? They're driven but influenced by that driver behavior, those loss runs, of course, but has your company been in any kind of litigation? So just like that really all ties in together and makes a huge difference. I'm going to hop over to this slide and let's just talk about kind of the symbol coverages. Brandy, I'm going to let you take the lead on this, talking about this auto symbols 1, 7, 8, and 9. And that is typically what's on most auto policies. If you could just talk a little bit more about that and how that differentiates.
Yeah, we love to overcomplicate things at the
For
insurance
sure.
carrier side of things. So I'll try to keep it real for you guys. So symbol one is essentially exactly what we have here, any auto. So it's any auto that you're using in the course of your business. And then you have 7 and 8. 7 is anything that we've scheduled. So, each year when you go through your renewal, they're like, give me a list of your vehicles. That's scheduled autos. Anything that's on that list is covered. Anything not on that list is not covered when you've got seven, the scheduled autos. 8 and 9 are your hired and your non-owned. Hired is going to be you've hired um, a driver to come and pick you and your team up to go do an event, or you're leasing a vehicle. Let's say you've totaled a vehicle and you have to go lease one. So that's going to be your hired auto because you are spending money to either hire or rent a vehicle. Non-owned autos are going to be your employee autos. Non-owned autos do not apply to your personally owned vehicles. It is only the vehicles of your employees. So a vehicle that you do not own being used in the course of your business. A lot of times, what you're seeing, you have to be careful with that hired non-owned. This is always the big question I get is, oh, we've got hired autos. It covers any rented vehicle. It does for liability. So if you're in the business of routinely renting vehicles, or hiring drivers, something like that, then what you want to do is just double check to determine if you want that property damage on there as well. That's kind of inside baseball. I don't see that a lot in pest control, but if ever you're finding yourself in a situation where you are routinely or you anticipate to routinely rent a vehicle, that's something you're going to want to talk about with your agent. If you have any auto, a lot of times you won't also have 8 and 9 because again, it's any auto. So most policies, what you're going to see are the 7, 8, and 9. That's the preferred one. Now, just because you have 7, 8, and 9 doesn't mean that, okay, I've got these 10 vehicles on the list and I forgot to tell them a week ago that I purchased this 11th vehicle. You have 30 days to get that other vehicle reported to us and on that policy, but it is just short time frame. You've got 30 days to do it, so you need to make sure that you do, but there's a little bit of leniency there. Essentially, it's scheduled versus unscheduled. Unscheduled is going to be 1 and scheduled is going to be 7.
Excellent. Thank you, Brandy. I appreciate that. And just a real quick from your expertise, do you have a preference on these schedules, one versus the seven, eight, or nine?
It's preferred that you have seven, eight, and nine because now we can provide some loss control. We can know exactly what we're on. So you're going to pay lower rates for that or have the ability to negotiate lower rates for that. When you have symbol one, then we have no insight to what those vehicles are. We don't know if you're driving a $100,000 vehicle or a $20,000 vehicle. So we get really concerned when we see symbol one. We're often willing to do that and happy to do that when it makes sense, but we're going to want to be more particular and quite possibly price higher for symbol one because we have no insight into what the actual risk or exposure is.
Yeah, thank you for that. I had a recent experience with a insured outside of Texas where unfortunately Stone Falls is not available. So working with a different carrier, and their autos were any simple auto one. And yeah, the premiums were they were higher for sure, which was kind of unfortunate, but that was the only way the carrier would let that policy be written. So makes a big difference on those premiums. So thank you for talking further about that. Let's talk through some trends, some interesting, the rising premiums for auto and commercial fleets, of course. And then let's talk a little bit too about the increased adoption of telematics and AI-powered monitoring, and then just some best practices and tools around fleet safety and risk management as key concerns as we go forward. A lot of it too is so driven by the owner of the company. So what's the policy of the company? How does the owner drive as well? It's truly like the best practices, surrounding yourself with safe drivers too. So as we kind of talk through that, it certainly makes a difference in those premiums. So actually, let me pause on that before we come back to that. And Brandy, I just want to ask you, let me go back to that slide. There we go. Let me just ask you on that real quick on what you see, what are the trends on owners who themselves do not have safe driving history or have losses, and then how does that merge into their company?
We don't see a lot, but I've seen it all. It doesn't happen often in the pest control industry, which I do appreciate. But
Yeah.
I'll tell you, I recently had done some research on the rates, and I think maybe it was last year. And we saw that between I think 2017 and 2023, auto rates on pest control fleets had increased by well over 50%. It was really getting closer to 70% increases in rates per vehicle. And that's all driven by losses. So it really made me think, okay, we got to dive down on these claims and the experience of drivers. And most of those losses were coming from, some driving practices. They're largely driven, the rate increases, by the at-fault accidents. And when I started digging into our loss control, some of our key accounts, some of the accounts that we have that have loss experience, a lot of the bigger fleets are going to have more losses. We dug in and found that the ones who had the highest volume of losses tend to have more managers in the at-fault claims list. So when
Mm,
you're seeing people who hold ownership or management positions in the company driving or being involved in at-fault accidents, also those who have speeding tickets or failure to yield tickets, that tends to be an indicator that the staff themselves take the loss control less seriously. And it's just across the board, Ben, that those in ownership and management, for some reason, it's a loss leader. It drives a claim trend for some reason. I think it's
thank you for talking.
accountability at the end of the day, to be honest.
Yeah, thank you for talking through that. And I know that one of your policies too is any new driver must have an MVR motor vehicle record check before joining the auto policy, correct?
Right. And we'll do that for you, right? You don't have to take that expense on. We are every day happy to run a motor vehicle record and come back and say, hey, this is a good driver. This is a questionable driver. We can add with no additional premium. Sometimes we might have to add an additional premium. There's a driver surcharge. So when a driver is really young, if they have less than 5 years driving
I was just
experience,
thinking about that. Yep.
it's an issue. Yeah, so we've been seeing a lot of young drivers, and unfortunately, the young drivers tend to be the loss leaders, especially in distracted driving claims. I think it just boils down to lack of experience. And so those tend to generate a surcharge. You're going to have to pay a little bit more. So when we run those MVRs, we want to be able to say, hey, this is great, you're good to go, no additional premium, or this driver's got some situations. We've ran into several of them where they have sworn to the owner that their driver's license is fine, it's active, and they have a clean MVR, only to find out that their license has been suspended for some time
Mm,
or
mm.
non-renewed, or there's always some issues that sometimes they don't disclose in the employment practices where it does kind of filter through in the MVR verification. So it's just best practices to, if you're considering a driver, send them over free of charge. We'll run that MVR for you.
That's awesome. Yeah, thank you. That's one of the best things I so appreciate working with you guys that you willingly take that on. You're truly one of the only carriers who will do that at it's your cost and not the pest control operators. So thank you for that. Much appreciated. And lastly, I'll just note that one of the other aspects working with you guys is so nice is that regardless when we bind coverage with you, regardless of the company's losses or not, however that works out, just at bind, I like that you always ask for what are your company's driving policies, safety measures, what are you doing on the regular? And it's really great because I can, when I ask an owner that, those who just can send that to me, like, oh, yep, here's our file, and boom, they just send it over, versus I'll follow up and say, hey, I still need to get that information from you. What's like, what do you have in practice? And sometimes it's like, okay, well, let's just work on developing that together. And
Right.
as your agent, I'm more than happy to take those best practices that I've seen from other companies, always, of course, with that anonymity, and just like to let's just build that together and how we can put those safe driving practices in place for you.
That allows us to reduce the premiums. That's why we're always asking for it. So if you've had some losses in the past and now you've got good loss control practices, we can negotiate not just eligibility, but pricing. And then if you've, no matter what, if, especially if you have five or more vehicles, if you're using telematics or if you have a good driver or auto loss control formal practice in place, that gives us the ability to negotiate discounts. Telematics, which we call fleet safety, that's an automatic 10% discount if you have those available. So we ask for those things because we're looking for reasons to say yes to writing your insurance, and then also reasons that we can use to hit those buttons to drop that premium down. So when they qualify, we just add it in there and make sure that it's discounted as much as possible.
Yeah, yeah, thank you for that. I'm just gonna go ahead and skip ahead to the talk. Let's just talk about telematics, and then we'll kind of get back to the uninsured, underinsured aspect and more about the policy. But yeah, really appreciate that. It is really helpful to know just what those behaviors are on the regular. And I think so. Something that's fun for me, I often say to my clients, I'm like, think about me as your lawyer, and I'm gonna take you to the judge. Judge being Brandi, and she's a great judge. You want this judge, but truly, it's like, hey, what are all the things that you've put into practice, and what are you doing to help me advocate your case for premiums? And to say, yeah, like all of our retention of employees is 10 years. Average age drivers, 35. 90% of them are married. Yep, we do have GPS or telematics, or hey, we just implemented front cameras as well. All of that information makes such a difference, and I want to hear all of it. So it's like I will often tell my clients, you can't over communicate with me. Like, please tell me everything, and then I'll sift through it and have a conversation further to the carrier on like what's important. Because while you may not think it's important, it very well may affect your premiums.
Mhm.
So just kind of along that line, this slide just summarizes those exact things. So I'll just kind of keep going. And here's just a couple of things as well, like, okay, what's all out there? And I'm happy to have a deeper dive conversation. I think it was a year ago. Warren and I were vendors at one of the um, a conference. I'll just say a conference anyway, and it was really interesting. The number of it was actually a software conference. That's the word I was trying to think of. The number of vendors who were there that were related to telematics and GPS and all of that was really quite staggering. Like literally, we were the only insurance company, and then there was just all these vendors specific to safe driving. So that really made me kind of sit up and pay attention. And of course, that matters for us as well. So here's just a few that are out there. I've actually done some pretty extensive homework on that. Happy to send out any of the information, but just to kind of go through that pretty briefly with the Verizon Connect. That's just, again, to just coach and champion that safe driving. Links Up, very popular as well, the GPS vehicle and asset tracking solutions, hardware and software. They just really provide that real-time data and visibility. GeoTab tracks the vehicle location, driver behavior, of course, and engine diagnostics to over 50,000 customers in 160 countries, 20 plus years of experience. So they're really diving in on that. Azuga is a Bridgestone company, and they power allegedly 11,000 commercial fleets as well, from small to large enterprises. So there really is a host of information out there. I really encourage you to, take a look at those. What do you have in your fleet, if any, and just look into that. So this is a nice segue, Brandy. Let's talk about kind of what this means from a litigation standpoint on accidents. So one of the conversations, again, I just always appreciate visiting with you, just learn so much. One of the conversations that we had, you had mentioned that vehicles with front end damage are more likely to be litigated than vehicles with other damage. So talk through that further, and then how those dash cams really then make a difference in that situation.
Right. So vehicles, when your vehicle has the front end damage, it becomes significantly easier for the other vehicle to claim that it was your fault. And a lot of times what happens at that point, depending on the damage, and we've seen minor front end damage generate really high auto losses when lawsuits come into play. And it's because it's increasingly harder to determine true bodily injury in auto accidents than like a work comp or a slip and fall type situation, right? Because sometimes we call it, it's kind of sneaky. They walk away just fine. They say they're fine. They don't get in the ambulance, and then 5 days later their back hurts, and you never really know what type of aftermath bodily injury there might be. So when you have front end damage, you're more likely to have um a potential litigation problem on your hands, just because it's significantly easier to prove that it was your fault. And the impact of that full front end to any other vehicle it's going to be a little bit higher versus just clipping or side swiping. So they
Sure.
tend to be, again, I keep saying this, it's a loss leader whenever your vehicle has the front end damage.
So we had also talked about that as well, that especially from a camera perspective, I mean, those on average are, gosh, less than $1,000, 1,000 or less per unit. And yet, in one of our conversations, it was probably less than 30% of fleets overall
Mhm.
have those cameras. So tell me more about that, Brandy. Why do you think that companies are, even though it really could help with any kind of, again, litigation situations, and they're really not, I mean, they're pretty cost effective overall, but yet the adoption and the buy-in seems to be a little bit low. Why do you think that is?
I'm not really sure actually, because I look at it from a different perspective, right? I look at it from the carrier perspective, and I think, oh, well, this is really going to be helpful, and in the long run will reduce your premiums. But for the short-term investment, you might not see it from that perspective, right? If you're going to
Mhm.
spend $5,000 today, you kind of hope that you're saving $10,000 on your insurance tomorrow. And I think maybe that might be the hesitation. And that's where we have to work together and say, okay, now let's start adding some of these discounts and try to provide that reprieve up front. I think that it's kind of one of those we need to pull together and make sure that we're really counterbalancing or being faster to reward some of those investments because it does help. I like to call it the double-edged sword because it's either going to prove that you are not at fault or it is definitely going to prove that you were at fault. So
Hmm.
there's still loss control that has
Yeah.
to go into play with that. But it dramatically reduces your exposure to fraudulent claims. And
Hmm.
I would say that you find those to be far more prevalent in your metroplex areas than you do in more rural areas. So, folks that have large fleets, and like what you have in your second bullet point here, DFW, Houston, Austin, all of those areas are where we have accounts that have higher volume of claims. And of those claims, higher volume of legal disputes within those claims.
Sure.
So,
Yeah. Absolutely. Absolutely. I sat with a former customer of mine when I was still in the termite business in the field, and they have cameras in their vehicles. And I just said, "Hey, I'm just really curious. We just kind of show me more about like, on the real world, on the daily, what does this look like and how do you use it?" And it was so interesting because this gal, as the operations manager, she said, at first, our team and employees were like really resistant because they just felt it was going to be Big Brother. We were going to try to catch them doing the wrong thing. And she said, once we got past that to say, I promise you, I don't have the time to watch over you in that regard, but truly, like this really is for your safety and for from an insurance perspective and litigation because they are in a metro area. And so she did show me, and granted, like one gentleman was a little distracted, eating a breakfast burrito or whatever, and she said, yes, I probably could bring that up to him, but I'm not going to because again, that's like I don't we said that we were not going to just watch them, like we're not doing that and just really using it in the regard that we need to if and when. So I thought that was really great. That was a nice insight for me on how to kind of get over that hump, if you will, with employees and with team members, that this is really for your safety. Let's, if I may, let's hop back over here. Excuse me one second. I'm going to slide back real quick to some uninsured, underinsured coverage. And yeah, so let's talk about, again, this is a nice segue from protecting self because of uninsured, underinsured motorist activity. So, underinsured motorist coverage really helps protect you when the at-fault driver has no insurance. And one of my next slide here, wow, those statistics are pretty staggering. I only looked at Texas, not other states, but Texas is pretty high. And so whenever we bind coverage with Stone Falls for auto policies, uninsured, underinsured motorist coverage is a big portion of that. And Stone Falls is very friendly offering that those additions. So we really appreciate that. So just know too that it covers medical bills, lost wages, and property damage. Really acts as that financial protection as needed. Covers medical bills, and then also will cover hit and run incidences as well. And without that uninsured motorist coverage, you really may be left for that out of pocket pay. So here's some of those statistics that, oh my gosh, like kind of took me by surprise a little bit. Consistently ranks amongst the highest states for uninsured motorists. And kind of the estimates are anywhere from 12 to 20%. So, we can kind of take that for what it is. It thought it actually has been jumping though in the last couple of years. And some law enforcement and state reports estimate the number can be closer to 1 in 5. Another source that I looked at, I just really wanted to look at all sources and make sure that, like, this really is all accurate information. Another source said 1 in 6. So I do think that is actually, very accurate. And again, we just kind of go back to like the earlier slides that we saw looking at those metro areas, DFW, Houston, Austin are going to have more uninsured drivers than rural areas as well.
yeah.
So, Brandi, let's talk a little bit more about that as well. Tell me what your thoughts are and how we can. Yeah, I'd just like to hear more from you on that.
Yeah, well, I mean, so this is uninsured, right? So we know that we're saying 1 in 5 drivers, they have no insurance at all. But the other side of that coverage is underinsured. And that means they've got coverage, but not enough. And those numbers are frightening. They're way worse than even the uninsured motorist. And it's
Yep. So
because,
here's under if you want to hop into that.
oh, sorry, I didn't get two slides.
No, you're good. Go ahead.
The
Yeah.
the underinsured motorists, as you can see, they're like significantly higher, and that's because our state minimum limits, they don't cover the average cost of an auto accident. So it's we find personally here just at Stone Falls in Texas alone, our uninsured, underinsured motorist claims are on the rise. And it has a lot to do with just these statistics right here. And then again, we keep harping on the metroplexes, but that's where the highest concentrate of uninsured or underinsured motorists are. And that's where you tend to have a lot higher exposure to just vehicles on the road, even. So it's how it shakes out. You do have a lot of issues with that, fraudulent issues as well, and sometimes, but in most cases, you're just going to run into an issue where especially when you're driving, let's say you're running a route and you've gotten off of a major road, but now you're in a rural or an area of a neighborhood, you're going to be running into more personal vehicles than commercial vehicles. And there's just a higher chance that those guys don't have insurance or don't have enough insurance. So that's where you want to have that coverage specifically is to make sure that your claims are going to get paid, that we can subrogate when we can subrogate, but that you're not just out of money. So what'll happen is, let's say you have a claim and it's a $50,000 claim, but the person who is at fault, the person who hit you, only has 25,000 in coverage. If you don't have
Yeah.
uninsured, underinsured motorists, you're just getting 25 and you're out on the rest of that claim. So that's why you really want to carry this coverage. There are some issues where some folks might try to come against you for your uninsured, underinsured motorist when you're not at fault in the accident. That's a they're very complicated claims to kind of understand how those shake out, and they almost never shake out without a lawyer being involved. And
Mm.
whenever a lawyer gets involved, the claims expenses start to increase, which is something that you kind of have to keep in mind, is that it's not always just the cost to repair or replace a vehicle. It's when lawyers get involved, it's a matter of what are we paying them as well.
Yeah, absolutely. Absolutely. And especially as we look at those Texas minimum limits, the 30, 60, 25. So to, clarify on that, 30,000 is per injured person, 60,000 on total injuries, 25,000 on the vehicle, on the property damage itself. And I think about, I mean, that adds up. Those numbers can add up so quickly. That 30, 60, 25 really it can be a drop in the bucket for a major auto incident.
I mean, imagine the medical bills alone and the
Uh,
lost wages. You want to be
yes,
able to
right.
pay your employee when they've had an accident, it's not their fault, and they're laid up for a week or going through surgery. Their family still needs that money, and there's just 25,000 is just not going to cut it.
Yeah, absolutely. Absolutely. So further on that, just kind of a nice slide here about underinsured motorist coverage, just like, what does that look like at fault driver limit versus actual costs, and then that UIM fills in the gap. And remind me, Brandy, is it 1 million, I believe?
There are so many
So many.
limits.
Okay. Okay.
Typically, you guys are going to typically carry $1 million in auto coverage, especially if you have a contract with anybody. The uninsured, underinsured motorist coverage goes anywhere. I believe maybe our lowest might be 100,000 all the way
Yeah.
up to 1 million. So you
Okay.
have coverage options. You don't have to pay for the $1 million if you feel like all you need is the 500,000, but it's definitely most agents suggest that you maintain the same limit. So if you have 1 million combined single limit for your auto, then that's typically what an agent's going to suggest that you have for your uninsured, underinsured motorist limit as well.
Excellent. And I know we as an agency, yes, that is our minimum is $1 million for combined single limit as well.
Right.
You bet. And with the UIM as well, it kicks in when the at-fault driver's limits are, obviously just too low, just pays the differences on the coverages. And like you said, just prevents and protects from major financial shortfalls. especially if that employee is, yes, seeking longer term medical coverage to be able to protect the employee and their family.
Right.
Let's just talk a little bit about we talked about this. I'm gonna hop ahead. Oh, I do want to actually, Brandi, talk real quick about the 1-800 report or how's my driving, report my driving. Yeah, will you just dive into that a little bit? I think that's always really interesting on statistics and driver rates as well.
It is really interesting. So I should have thought about it. I had a presentation and some research that somebody had done and I think it was 800 don't text or report
Yeah.
texting maybe,
Hmm. Hmm.
where it's not just the cameras and telematics sometimes. It is more of the distracted driving, and people on the road are more inclined to call that 800 number and report distracted driving or aggressive driving than they are to do anything else. So
Hmm.
it's really interesting. We've worked with some folks on things like that where we're saying, look, I don't care if it's one strike. If the driver has two strikes, we want you guys to talk to them. But when a
Yeah.
driver has three strikes, especially three strikes inside of X amount of time frame, that means they're probably more routinely distracted than you even know because we're doing this based on people witnessing and doing phone calls. So we find that people who have a report my driving on the vehicle has lower losses, specifically at fault losses due to distracted driving. And it's
Hmm.
mostly not due to the phone calls coming in. It's due to the fact that the sticker's on there. It curbs the behavior of the driver because now
Hmm.
they're afraid of the repercussions of if somebody tells on me. So,
Yeah.
and it, again, that goes back to accountability, though. You have to have the sticker is only, X amount effective. You have to also say, okay, well, we told you if this happened, this is what the repercussions are, and you have to stick to those so that they know that there are consequences to being distracted. I love to use my brother as an example because I'm fairly certain he's the worst driver in the world.
I know you have talked about him before. I love it. Does he know that
Yeah,
you
and
talk
he's
about
he's
him
had
like
a
this?
couple. He called me up recently and was like, I don't know how this keeps happening to me. I had, my second, like my boss was called for the second time, and I said, if I was your boss, I wouldn't let you in a vehicle. So because I know his driving is awful and it's probably far worse than what's been reported. So I think it curbs behavior. They're
Mm,
less likely to pick up the phone when they know they're being watched. And that also probably ties into the cameras that face inside the cab as well.
yeah, that's great. Thank you for that. And like you and I had talked, I'm going to just kind of jump ahead here to some other slides for the sake of time. Like you and I had talked was, especially if we have some of those drivers who we know they're younger, and I want to be cautious about age too, because age doesn't always determine their level of their driver safety, if you
Right.
will. But like you and I said, let's say we have a little bit younger driver. Yep, maybe he or she has had an incident or two, or a phone call has been made on him, whatever that is. Like that would probably be a great example to let's set up the route for that driver, for that employee to not be in the heart of rush hour and to
Right.
not be right and like to kind of keep off of the beltway, like you and I had talked about. Let's use our software tools for route optimization to the very best ability that we can and just kind of again think through that about, hey, you know, Billy's not doing so great here with driving. He really probably shouldn't be full force Houston traffic at 8:30 or whatever that is.
Yeah. 4 o'clock in the afternoon.
Yeah.
Right. I think that we find that people who, in part of their loss control, are very careful about what routes they take and how many jobs they schedule in a day, tend to have more favorable loss history. Because if you can get 5 jobs in today, but it's really pressing and you've got limited time in between, then you're more likely to be rushed. You might not stop. You might not yield as long and see that vehicle coming because you're rushed, you're distracted, you're trying to get onto
Yeah.
the place to close out your job. So those who can are not required, that they can't reschedule the jobs if they can't get it done in a reasonable amount of time, or those who have a really packed, a high volume of jobs inside of a single day, or sites inside of a single day, they tend to really stress and they drive faster and they try to get them knocked out, because that's, I have
Hmm.
to knock all these things out in front of me. So
Hmm.
we try to we reward by reducing premium.
Yeah.
There's no other way I can give you a benefit or reward you for your safe practices other than saying, I recognize that you're controlling your losses the best to your ability. And so that makes you a lower risk. So I'm going to charge you less premium. So when you're doing things like that and communicating to Jennifer, your agent, that, hey, until the driver's 25 years old or until they've been here for a year, they have a limited route. They can only drive this route. They don't get on any major thoroughfares during rush hour. They have a limited number of jobs per day and things like that. When we show that it's a little bit lighter and more disciplined schedule, those are times where we can make exceptions. We can lower the premium and we can really start working with you to reward you for um just trying to do something a little
Yeah.
bit safer.
Yeah, yeah. Thank you so much for saying that. And that again kind of comes back around to what I was saying about you can't over communicate with your agent. Tell me all of those things or run those ideas by me and vice versa. And then like I say, take that to you and just to have that conversation and those discussions to look at those premiums. Because again, we're here for you, truly. I think there's a huge, since being in this business now for a little over 2 years, there's just like this misconception and understanding about gosh, you're in insurance, like everyone's just out to make money and to have high premiums and commissions and whatever. I'm like, well, okay, that may be true for some, but I promise you that's not true for us because we really truly want to see you win. And gosh, Brandy, without naming any names, of course, the company that you and I just wrote um, and they're new to both of us, but they had incredibly safe driving, like hardly any losses for the last 5 years. And you cut their premiums by 11,000 over their previous agent and carrier, which was so great. And so that's a great example about they were rewarded for safe driving versus they hadn't been. So that was really fun. That was a fun
Yeah.
story. Yeah.
Yeah, it helps too to work with an agent who knows what to communicate and when, and who wants to save the money. A lot of times when somebody's coming from, a big, large national carrier, or somebody who's not a program carrier, we're both like very specific to Texas, very specific to pest control. So we're not going to raise our rates or just charge higher rates because that's what Nationwide's doing or that's what State Farm or whoever else is doing. We're going to do what we need to do as it's relevant to our program. So it helps to make sure that you're with the right agent, a relevant agent, and a relevant carrier.
Yeah,
Something
for
very specific to pest control goes a long way.
Absolutely. And something else that just comes to mind is we know that it's common for pest control employees to hop around from company to company.
Oh yeah.
And so it's like, so that, they may not be at A pest control anymore, but they're at B pest control company now. And like, hey, we still know what their driving record is. Brandy still has that on file.
Oh yeah.
And it's kind of a small world from both the insurance carrier and obviously pest control standpoint. So that really makes a difference too. So
Yeah.
I appreciate that we have those open communication lines.
Yeah, and that's another area where you can save money because to us the higher the turnover, the higher the risk, right?
Yeah.
So when
Mhm.
you guys have a good crew that just kind of has been with you for a while and a lot of you guys are family. When that's the case, I don't see that on an application. So if you tell Jen will 100% pass that along to us. And that's we're looking for areas to drive the premium down. That's our job, right? So I would say kind of just feeding off of Jennifer's don't be afraid to over communicate. Some of the areas like employee turnover, what you're doing for safe practices, nothing is, anything is a lot to us. And we just have to have something in our file to say, see, I told you they were deserving of credit. And that's what we're looking for. It's not on the app.
Yeah.
It's when we have the conversations that we're able to negotiate better pricing for you guys.
For sure. Yeah, it really is. It makes it truly very fun. And I'm grateful for the partnership. It's been great. So let's take about the next 5 minutes to discuss some worker comp and auto tie-ins, and then we'll open it up for questions if that sounds good.
Yeah,
So as we
this
know,
was hot
go
topic
ahead.
at the this was hot topic at the event last year.
Oh my gosh, it was. So for the folks on the call, Brandi and I spoke on the last day of Expo for insurance and conversation. And the evening prior, we had said, "Oh, hey, Kay will give a presentation. We have slides." And in just chatting with folks, all the attendees were like, "Let's just have a conversation. Like, we just want to really ask some questions." And we're like, "Great, let's do that." And so this came up a lot about workers' comp and auto accidents and like basically, how do you avoid being sued? Two, when is this an auto claim versus a work comp claim? And, just how does this work? And just basically when a loop opens, how do we close it?
Right.
So we just wanted to really bring that back around, and hopefully we'll get invited back to a business expert talk in the future. To we can always continue the conversation too, because it really is so interesting. And like you and I were talking, I mean, Texas is the only state where employers they're not required to carry work comp. It is very common. It's more common than not to have workers' comp. But actually, I met a company at Expo last year who did not have work comp. They do now, since joining our agency, but they didn't and said like, oh, most of them are friends and family of our employees, and we just don't feel like it's necessary. I'm like, yeah, actually it is though. And like, let's just bring it around, especially to an auto perspective. So let's
Mhm.
say that employee is in an accident and you don't have work comp, it immediately is filed against your auto
Right.
policy versus when you do have work comp, it is filed towards your work comp policy. So let's get into a little bit more about that, Brandy, and talk further. Tell me your perspective on it.
Yeah, I think that I love this industry because there are so many people where it's friends and family that are
Yeah.
working together in the business. And I think for that, it's all the more reason to have work comp because it does cover your medical benefits, or your medical bills. It does cover some of these coverages that you'll break down in a second, and it's immediate. It's immediate relief. So, and the misconception too is that you only carry work comp when you have employees. And that's not necessarily true because if we've seen situations where it's a husband and wife business, and maybe the wife is running the accounts, running the books, taking care of all the office administration. They get in an accident running errands on behalf of the company, and with no work comp, there's no medical benefits. You don't get that immediate relief. And so then you have to start asking yourself, do I sue my own auto policy? And I can assure you carriers are not big fans of you suing your own auto policy. So you end up, instead of claiming underneath the work comp policy, you claim underneath the auto policy. And this is what I was telling Jen, your work comp policy is $2,500.
Yeah.
Your auto policy is $2,500 per vehicle.
Mm-hmm.
When you
Yep.
turn in claims, your premium starts to increase because that's your loss ratio. Based on your loss ratio, the more losses you have, the more premium you pay. Do you want to pay 10% of $2,500 or do you want to pay 10% of $25,000?
Mm-hmm.
Turning in a
Mm-hmm.
claim on your work comp policy is far more beneficial today and in the long run than what it would be turning in on your auto. Also, it's harder to drive claims up on the work comp than it is the auto. A lot
Yep.
of what we see with the large losses on the auto are because they're being litigated, because somebody has hired a personal injury attorney. And we're seeing more employees hire personal injury attorneys now than ever before, and they're trying to pull from the work comp and get it over into the auto. And the reason why they're doing that is because the work comp policy is heavily regulated. The state regulates what a lawyer can charge as a fee. They're not they're not going to pay for pain and suffering. They give you 70% of your lost wages. Whereas if a lawyer can pull that away from a work comp claim and file it underneath an auto claim, they're gonna charge as much as they can to get for their fee, for their legal fee. They're going to absolutely try to claim pain and suffering. They're going to claim 100% lost wages, any expenses, that go associated with that on top of all these other medical expenses and benefits. So your auto claim tends to be significantly more higher than the average work comp claim involving an auto accident because of that.
Yeah. Thank you for that. And you and I had discussed too, I said, hey, Brandi, give me just a quick example. So let's say an employee it is in a auto accident and says, gosh, no, I'm fine. I feel fine. And what was your advice to me?
Yeah, so and actually after the event last year, I went back to our claims manager and our auto specialist and I said, "We've got to figure this out. What can they do?" And so essentially they said, "Look, like if they immediately turn in a work comp claim,
Yeah,
then it's and a work comp claim is active. It's there. It becomes infinitely harder for a lawyer to close out that claim to file it underneath an auto claim. In many cases, the state won't even allow it. It's under the comp now. So the best practice would be that if an employee is in an auto accident and they have significant front end damage, specifically, or especially if the airbags are going off, then
good
you
point.
should
Uh-huh.
you should immediately say, okay, I'm glad you're not hurt. I'm glad you feel well, but I want you to, we'll pay you for the day. I want you to go to the clinic and get checked out and turn in a work comp claim. Turn in an incident notice because at that point, if down the road there are injuries that they didn't know or they do obtain legal counsel, then you already have that work comp in place that's deterring them from trying to drive claims up through litigation underneath the auto.
Yeah, that was so great, Brandy. Appreciate it. Actually, so after TPCA last year, when you called me to follow up on that after, yeah, thank you for the due diligence. I was over here at my little neighboring coffee shop and I remember it because I thought it was such an aha light bulb moment for me on, yeah, that makes so much sense to go just have that work comp policy claim, have that claim open. And
Yeah.
then it just, because that does is that immediately closes out a potential auto claim.
Mhm.
And with auto premiums being like probably the biggest sticking point in all of the conversations I have with insureds, I shouldn't say all, most, it just makes sense. And so hence work comp policies are mission critical, even if it is, friends and family in the business. I often actually joke more so critical if it's friends and
Yeah.
family in the business. And they really are very inexpensive. On average, I write them for mid-sized companies from 2,500 to 3,500 per policy, which is the same cost typically per unit on the auto. So it really is just like I say, a light bulb moment for me. Thank you for that.
Yeah.
So with that, I am going to pause and let's open it up for questions if we can.
Okay, let's see.
Thank you.
There's not any in the chat box, but let me see if I can bring everybody on.
Okay, that sounds great.
We all made that fun. I've got three young drivers, and I knew that was an issue when I hired them, but I love them to death and wouldn't give anything for any of them. I would appreciate if they would all hurry up and turn at least 21, but
Yeah.
can't rush the clock. So
I think it's really interesting the young drivers. I don't necessarily subscribe to the underrating fear of young drivers. I think that I call it counterbalance, right? My Jen and I are stuck in the middle. She has to create a good, affordable product for the pest control operator. I have to do the same thing, but I got to sell it to the carrier that it's a good investment. So Jen and it's like a selling up and down together type
Yeah.
situation. And so from my perspective, I always say there's a counterbalance. If the carrier is afraid of this thing, instead of them saying no, we say we counterbalance it with here's what they're doing in loss control to prevent that one thing. That's the first thing, right? And then the next thing is, okay, well, let's talk about rate, let's talk about deductibles and things like that. So with young drivers, especially, the industry the way it is, we just got to work with you guys. You got new people wanting to come in, you got young kids wanting to come in and get in the industry. It's unavoidable. There will be young drivers. So it's just what are we doing together to make sure that we mitigate potential losses with the kiddos?
For sure.
Exactly. And we have the trackers that, we watch hard braking, hard acceleration,
Oh,
usage
that's
after hours. And we just got cameras in. We have not installed them
Nice.
yet, but so that's next step. So
That
That's
makes it
great.
so easy for me when you don't necessarily fit the box, right? It makes it so easy for me to go and say, yeah, they're not checking all the boxes, but we really like them. They're doing all this other stuff and we like them so much that we're going to give them a discounted. We're not only going to make an exception, we're going to give them a discount on the premium. These are a leader, and I think that goes a long way. Just being a member of the TPCA, we give people discounted rates for that just because it does
Hmm.
mean that you're taking things seriously. You're involved in the pest control community, you're involved in making good choices. And I think we just try to look for everything that we can to determine you guys rise above the rest.
Yeah,
You're doing something or anything that's a little bit different to make the slightest difference, essentially.
yep,
for
100%.
sure.
Yep. And I appreciate that y'all kind of think outside the box. So
Yeah, thank you.
You guys keep us on our toes. We've seen some.
Yeah,
there's no
for
telling what y'all
sure.
seen.
Yeah, we've seen some interesting things. Not just pest control, obviously, but auto is one of my favorites. We had one, and it wasn't a pest control account, but and I love the insured. I wear his ball cap every time I go golfing. It's on my desk somewhere. But he uh he and the agent and I, we've all met. We're great friends, and he goes, I haven't been able to hear from this insured. I know we've got a claim on it, but or the driver, he goes, I've been calling him. I can't get a hold of him. I said, well, Bud, that's because he's in jail. Like, I had to pull it up. I was looking at the claim, and the police report had it at like 2:15 in the morning on a Wednesday, and I'm going, oh, well, that's at first I thought 2:15 in the afternoon, and I dug in deeper and I go, oh, well, that's when the bars close.
Oh
So
no.
he was using the company vehicle, hanging out
Mm,
to bars and got in an accident. And when he got hauled off to jail, he knew he was losing his job, so he just never called. He never called the poor owner back. So
Mm,
we've seen some odd ones. It's the litigious ones that scare me more than anything. The ones that
for
aren't
sure.
interesting at all. The ones where pest control, if you've got a logo or a license number on the side of your vehicle, you're a target for some of these people who just want to turn in a personal injury claim that want to go to, and you've got some lawyers who recommend you to specific doctors and specific chiropractors, and they know what to put in the reports to keep the claim going and to keep driving it up. You see it again more in the metroplexes, but that's what I hate to see and unfortunately see the most of is what I would call highly litigious um, bodily injury claims.
Hmm.
yeah.
Yeah.
Yeah. Yeah. We watch the after hours driving very closely. I have alerts set up and, where they park the vehicle.
Mhm.
If it moves after a certain hour, I get an alert and, that's just you're fired on the spot. There's no
Mm,
Yeah.
excuse for my truck being out at 2 o'clock in the morning.
It's that
yeah.
So,
accountability that makes the difference. We've got, and that's kind of where I came to the accountability concept is we've got and I won't name any names, but we've got a large fleet. And then we're looking at two of them side by side. There's a couple of things that make a difference. You've got a large fleet with a really high loss ratio. They're constantly in at-fault accidents. And you have a similar size fleet that has a really great loss ratio. They've got a couple at-fault accidents, not significant. They happen. And then, little things here and there, but the volume is staggeringly different. And the two aspects that stand out the most is one, the driver policy says it's two strikes, you will lose your job. They also had a plan where they said the collision deductible is $2,000. If you're at fault, you're paying 50% of that. If you have X amount of accidents, then you're suspended or you're fired, right? They had an accountability thing, but they actually did it. Whereas the
Mm.
other one, they had a similar policy, but they didn't enforce it. And they also had managers who were in multiple accidents. So the same manager and multiple at-fault accidents who were still there. So they were not only not enforcing the policy with their team, but they were themselves constantly going against it. So we saw that there was a huge difference between the two. And the other difference that we saw that tends to happen, it's actually quite apparent to us that there's a significant difference in let's call it the profitability of a risk. The agency that this large one was with didn't they weren't working with anybody who was a pest control agent. The other one was it was Warren.
Mm.
So, Warren will go out there and he'll say, listen, man, you got to do this. Brandy's scary. She's going to get you at renewal.
Yeah.
Whereas the other guy's like, no, just renew it. It's fine. The higher the premium, the more we get paid. And I think that it's not just the accountability of you as an owner and an operator, but it's also the quality of agent and their knowledge and relationship with the marketplace and their ability to help you get to where you need to go.
Yeah, thank you for that. And lastly, I'll just note too, because as you had helped me understand, it's for the greater good, the overall pool of the premiums for everyone. So like look if we need to let someone go because they're just not following those best practices and not doing the right thing, it really does affect everyone. And so it's for the long-term gain.
Yeah, it's actually quite interesting. So you got to think about it from a monetary standpoint, just inside baseball, so you know how it's done. When you have five drivers and one of them is a problem, that driver surcharge goes to the entire premium. So whenever you're getting increased rate or a debit, or you're getting a driver surcharge, which is essentially a debit, so we're adding, let's say, 10% increase in premium. It's not for that one driver or that one auto that they're assigned to, it's for the whole policy. So if you've got a big premium because you've got a lot of drivers, that one driver is affecting the overall operation and the overall expense. And so you have to be mindful of how much is this driver really costing us? It could sometimes be, I think we recently saw like a 5% debit or a 5% surcharge on a driver for one that we looked at recently was a 5,000, just under like $5,500 for one driver. And that you have to think about that because now you've got the expense not just associated with paying them and hiring them and training them and all the other administrative or human resource stuff, but you've got an additional auto premium, which also, affects your umbrella premium. So it's a
Yeah.
bit of a domino effect, and there's a little more of an expense to it than what meets the eye when you kind of dig in and go down to the weeds of it with the way the insurance is rated. Warren's always quick to call me and say, how much is this one going to cost us?
Ah, I like that. Good stuff.
Thank you guys so much.
Yeah.
Yeah,
That was
thank you.
really great information today. And we, of course, recorded it and it will be available on our website later on. So,
That's great. Thank you.
yes.
Always
Excellent.
eye-opening. Yeah, thanks y'all. Thank y'all for jumping on and taking the time to really dig in.